Have you been watching the incredible roller coaster ride of QuantumScape stock lately? We're talking about a company whose shares just surged dramatically, only to see, well, a significant chunk of those gains evaporate in a single day. It's been absolutely wild, leaving a lot of people wondering, what is really going on behind this extreme volatility? Today, we're taking a deep dive into QuantumScape. It's a company often described as being right at the absolute cutting edge of battery technology, poised potentially to revolutionize electric vehicles. Welcome to Everything You Need to Know About Finance podcast.
And yeah, let's be absolutely clear right from the start. What you're about to hear is our deep dive into the information we've gathered and analyzed. This is definitely not financial advice. It's really a guide to help you understand the complex dynamics at play here. A really compelling story.
Exactly. So let's maybe set the stage with the numbers because they tell quite a story, don't they? QuantumScape, ticker QS, has been one of the standout performers among EV-related stocks in 2025, really has. You've seen year-to-date gains over 164% and an impressive 84% over the past year. Just in the last 12 months, this stock has swung, get this, from a low of $3.40 to a high of $15.03. It's truly been a journey of extreme highs and some sharp pullback.
And what's really crucial to grasp here is why. Why has this company generated such intense interest and, investment potential? QuantumScape isn't just making small improvements. Their entire focus is on developing these next generation solid-state lithium metal batteries. Think about what that promises for the EV industry. Significantly lower cost for batteries, much more range on a charge, and importantly, vastly improved safety. A lot of people see this as a potential panacea, a kind of universal solution for some of the biggest hurdles facing mass EV adoption. And it's really vital to understand this is fundamentally a battery company, specifically R&D stage. They're not mining lithium or cobalt. They're not an oil company. Their whole reason for being is about innovating energy storage for EVs.
So our mission today is to really unpack that incredible technology, try to understand the forces behind its recent, dramatic volatility, and also explore what milestones and challenges really lie ahead for QuantumScape. Let's start by digging into the tech that's causing all this buzz. Okay, let's dive into the core of what QuantumScape Corporation actually does. Because this isn't your typical manufacturing giant with steady revenue streams. Not at all. This is a research and development stage company, founded way back in 2010, based out in San Jose, California. Their sole purpose: develop and commercialize these revolutionary solid-state lithium metal batteries. For EVs, maybe other things too. And look, it's not some obscure startup either. They've attracted some seriously heavy hitters as investors. Names like Bill Gates, Volkswagen. When players like that put money in, well, it certainly signals some belief in the long-term potential.
Yeah, and the real game changer with solid-state batteries, it really lies in their fundamental chemistry. Unlike the lithium-ion cells we have now, which use a flammable liquid electrolyte to move ions around, solid-state batteries use a solid material instead. The insight here is pretty profound. This shift basically eliminates the risk of fire, and it significantly increases energy density. So you can pack more power into a smaller, lighter battery. This means potentially much higher energy density, way faster charging speeds, and just a much safer battery overall compared to what's out there now. It's not just tweaking things, it's a fundamental redesign. It could unlock performance barriers people thought were insurmountable for EVs.
And a huge piece of news that recently sent their shares just skyrocketing was centered around their proprietary Cobra separator technology. Remember that? Back in June, the announcement that this critical process had entered what they call baseline production. Well, that caused an immediate, almost explosive reaction in the market. Shares jumped over 50% in just 1 week. That kind of rapid move, it often signals something big happened. In this case, a tech breakthrough.
Absolutely. The Cobra separator is so crucial because it's really the heart of their solid-state design. This breakthrough enables a heat treatment process that's apparently 25 times faster than before, and it needs an 80% smaller manufacturing footprint. What's really critical is that it's designed for scalable solid-state cell production. Scale is everything here. Its role is vital. It has to stop tiny short circuits inside the battery, but still let the lithium ions flow freely and efficiently. That's how you get power. And these solid-state separators, especially ceramic ones, they're notoriously tricky to make consistently and at scale. So hitting baseline production for Cobra is seen as clearing a major technical hurdle on the path to actually selling these things commercially.
Indeed. It's these kinds of technical steps forward that make a story like QuantumScape so captivating, really. Before we dive into what triggered that recent plunge, just a quick note. If you're finding this deep dive insightful and you want more analysis like this, please do like and subscribe to our channel. It really helps us bring you more in-depth content. Okay, now let's address that dramatic reversal we saw. So after that incredible surge we were just talking about, the market saw this really dramatic reversal. QuantumScape stock plunged nearly 17% on Monday, July 21st, wiped out a big chunk of those recent gains. And it wasn't like the whole market tanked. The broader S&P 500 was relatively stable that day, interestingly. So what was the main force behind such a sharp, sudden drop?
Well, the primary reason for that drop, especially since there was no big company news or major EV policy shifts, it was almost certainly profit-taking, pure and simple. When a stock is up a lot, like QuantumScape had been, and so quickly, short-term investors often see that as their cue to lock in those significant gains. Cash out. And that creates selling pressure, right? Which can then trigger a sort of cascade as other investors get nervous and follow suit. It really highlights something critical about these more speculative stocks. Their price can easily outrun the fundamentals in the short term. That makes them super vulnerable to even small shifts in sentiment. It becomes less about the company's news that day and more about the market's mood, maybe anxiety, or just wanting to secure profits. And as we always see in volatile markets, volatility often just creates more volatility. It feeds on itself.
Yeah, and this plunge also brought those long-standing valuation concerns kind of roaring back, didn't it? Let's be blunt here. QuantumScape is still a pre-revenue company, meaning they haven't started selling the product at scale yet. This is after years and years of intense R&D. They are still burning through cash. And crucially, they haven't yet secured any large-scale commercial contracts to actually deliver these batteries. Think about this disconnect. Their market cap, the total value, hit nearly $7 billion around July 19th. Meanwhile, they reported a net loss of $124.6 million in just the first quarter of 2024. That's a huge gap between the market's valuation and the current revenue reality. Now, they do have substantial cash on hand, about $1.03 billion as of March 31st. That gives them an estimated cash runway into 2026, meaning enough money to keep operating until then. But the market is clearly getting a bit impatient. They want to see actual sales, actual commercialization.
And this sell-off, it also reflects a broader sort of underlying uncertainty across the whole EV supply chain right now. We're seeing major automakers, big names like GM and Ford, actually slowing down or even pulling back on their EV production plans a bit. This seems to be largely due to maybe softening consumer demand in some areas, tighter margins, things like that. And when the big automakers who are the ultimate customers for QuantumScape's tech, when they pull back, that uncertainty just inevitably trickles down. It impacts upstream suppliers like QuantumScape, who are heavily reliant on getting those future contracts with OEMs for mass adoption.
And QuantumScape stock, it just has this inherent volatility that amplifies these moves. It's almost part of its DNA, you could say. It has a really high beta of 5.17. What that means is for every 1% move in the overall market, QS tends to swing over 5% in the same direction, so it dramatically magnifies both gains and losses. Plus, there's significant short interest. Over 18% of its available shares, the float, were sold short. That means a lot of investors are actively betting against the stock, which can make downward moves even faster as they profit from declines or maybe get forced to buy back shares later. And on that Monday, the trading volume shot past 60 million shares. That's like 6 times its average daily volume. Really underscores the intensity of that sell-off.
Yeah, and if you look at what the analysts are saying, it kind of tells a similar story, echoing these concerns. The company isn't profitable yet, we know that, and currently only 1 out of 7 analysts covering the stock actually rates it a buy. The average analyst price target is quite a bit lower than those recent highs, sitting around $4.80. MarketBeat even flagged a recent reduced rating among analysts, signaling maybe a lack of confidence in the immediate upside potential.
Right. And to top it all off, technically speaking, the Relative Strength Index, the RSI, that's a momentum indicator measuring price movements, for QuantumScape, it was at a sky-high 90.92 just before the drop. Now, for those unfamiliar, an RSI above 70 usually means a stock might be overbought, risen too fast. Anything over 90 is pretty rare and often seen as unsustainable. So such a high RSI number frequently suggests that a near-term correction or, some consolidation is pretty likely, basically signaling the climb couldn't keep going like that. Okay, but despite that recent plunge, it is important to highlight there have been some significant positive developments for QuantumScape too, things signaling progress on their long-term goals. One really notable one is a recent agreement they just entered into with Murata Manufacturing Co., a big name in electronics. This involves a first phase of collaboration specifically aimed at exploring the high-volume manufacturing of that ceramic film, the one that's essential for QuantumScape's solid-state battery tech.
And crucially, this partnership signifies a huge step forward. It really does. It brings together QuantumScape's, advanced battery technology with Murata's long-standing proven expertise in ceramic components and, importantly, high-volume manufacturing. The goal is clear. Speed up the industrialization and commercialization of solid-state batteries by teaming up with industry leaders. This is critical because scaling up advanced battery production, especially for a totally new tech like solid state, it's incredibly complex. It needs deep manufacturing know-how. It's one thing to make a working prototype in a lab. It's another thing entirely to mass produce it reliably and affordably.
Right. Looking ahead then, there's some very key milestones that investors, and the whole industry really, will be watching extremely closely. The company is set to release its Q2 2025 earnings this Wednesday, July 23rd. You can bet investors will be keenly watching for any updates on new partnerships, clear production timelines, especially for that Cobra separator, and also details on their capital spending. These reports are much more than just numbers, so like progress reports on what is inherently a multi-year journey.
Exactly. And if the stock is going to regain momentum and, more importantly, sustain it, what really needs to happen is concrete, tangible proof. Proof of scaled-up Cobra separator production, showing they can actually make this stuff reliably at scale. And beyond that, the market desperately wants to see the actual delivery of prototype batteries to the OEMs, the car makers, for real-world testing. That's the real-world validation the market craves right now, especially with all the focus on profit-taking and valuation concerns. While the dream of commercializing these batteries is, undeniably transformative, it's important to keep reinforcing that the technology, while super promising, is still likely several years away from being ready for full-scale production in the cars you and I might buy. That's the long game they're playing. And it requires immense patience from investors.
So as we've sort of unpacked today, QuantumScape is very much a high-risk, high-reward, speculative play. No doubt about it. It is incredibly sensitive to breaking headlines, to rapidly shifting market sentiment, and absolutely to those crucial long-term timelines for bringing a truly revolutionary technology to the mass market. It's certainly not for the faint of heart, as they say, but its potential is equally immense.
Which really raises an important question for you, the listener, to consider as you watch this story unfold. In this really intense and highly competitive race for EV dominance, will QuantumScape's future ultimately be defined by the sheer brilliance of its technological breakthroughs? Or maybe its ability to finally secure those concrete commercial contracts for mass production? Or perhaps its capacity to just successfully navigate the often unpredictable currents of market sentiment and the broader EV industry trends? It's a truly compelling journey to watch, and honestly, one that could genuinely reshape the future of transportation.